Hi everyone, my name is Dinesh Goel and I'm here from Property for Financial Freedom. Here we provide one-on-one mentorship to buy properties in the growth area with data stacks. We also operate as a buyer agency to help you secure those great properties. Today I'm going to cover a topic: insights on capital cities and where is the next opportunity. Where I feel you can get a really good property with a good cash flow and a good capital growth as well. So, this is the same topic which I covered on a PFA Expo in Sydney. I'm doing this video so that I can reach to the wider audience and convey my message. So, if you want to know where's the next opportunity, stay tuned. To talk about any particular city, I'm just letting you know that I've extracted few graphs from onthehouse.com.au. It's a free source, data source. It gives you high level information on how the suburb is performing, what is the median rent there, how's the rental yield, and all. So I particularly pick up one suburb in any particular city, which is pretty good on data. So if for Sydney, I've picked up Quackers Hill, right? So let's talk about overall how Sydney has performed. What we have seen is in the COVID time, it has grown around 25%. It's a massive growth. But after that, it started going down and it has corrected around 13% due to high interest rates, inflation, and affordability issues. It started going down, right? But what we have seen in the past few months, maybe couple of months, you can say, there's a lot of activities coming back in the Sydney. Auctions are very busy. It's going like 150 200k above the reserve price here. So now the stock is very low. We can see the interest is coming back, but we generally don't prefer buying in a Sydney. The reason behind is, even though you are investing $1 million in Cocker Hill in Sydney, you are only getting around 550 rent, which is somewhere around 3.2% rental yield. Even though rents are increasing, because the value is increasing too much, the rental yields are compromised. It's started coming back a little bit, but 3.2% rental yield in today's 6 to 7% interest rate environment is heavily negative geared. We don't really prefer burning money just to hold the property and keep that burden on your head. Let's talk about Melbourne. As how other capital cities have performed, Melbourne hasn't performed that great comparing to those cities. So what we have seen is around 10% growth in Melbourne during the COVID, and since its peak in February 2022, it has corrected around 9%. So it is just recently started showing some recovery, started going to the positive territory, and started like 0.9% growth in last month with 1.6% growth in last quarter. These graphs are from Taylor's Lake. So what we have seen is it's grown quite well during the COVID, but not as much as comparing to the other capital cities, but then started going down. Same story with that. The rent is around $500 for around 900k property, right? So which is just around 3% rental yield. Again, to hold the properties in Melbourne, you are burning money from your pocket, yeah, which we don't really prefer. So this is median value. You can still secure a property in 700, 750, 800 mark, but again, giving 500 rent will be heavily negative geared. Next is Brisbane. So Brisbane have seen massive growth during the COVID. So it has grown around 40% in total, right? So because of the massive growth after the COVID, as most of the capital cities has performed, it has corrected around 11%. But what we have seen is the activity is coming back. It's now again started growing. Yeah. So these graphs are from Slack Strike. 350k house become 550k house, so which is massive growth. Rent has grown as well, but not with the pace of what the prices was growing. Something similar to Melbourne, which we have discovered. The rental is compromised a lot. So it was giving like 5.5, somewhere around 6% sometime, but now thrashed to 4.5%. So again, with 6 to 7% interest rate scenarios, Brisbane properties will not be much positive. But again, for capital point of view, I feel Brisbane can be the next market. I will talk about more about like why I feel Brisbane can be next market after discussing all five capital cities. Yeah. So next is Adelaide. So Adelaide again, similar story during pandemic. It has grown massive, 40% growth. The good thing about Adelaide is it hasn't corrected from the peak. But the issue is some good suburb has grown around 60% its from its pre-pandemic value. So what I feel is it's not a right time to enter into the Adelaide market. It is just sitting on the peak, or I can say it may have some slow growth from here, right? So these graphs are from Paraloi, one of the very good suburbs. I'm observing this suburb from last 3 years. Paraloi has grown from 300 to somewhere around 480 within last 5 years. Yeah, steady growth and massive growth in last 3 years. Rent, same story, has grown from somewhere around 320 to somewhere around 450. It's grown a lot, but hasn't grown how the prices has grown. So it started compromising. So 5.8 was there 5 years ago, started going down now somewhere around 5%, right? Same thing, it's not as bad as Melbourne, Sydney, but not really lucrative as well, right? So you will still have negative cash flow if you want to enter in Adelaide market now. So that's the thing. Now let's go to the Perth, one of my favorite. Same thing, as similar to Perth, it has done pretty good, around 25% growth during COVID. But the best thing is it hasn't gone down and still, going up very, very fast. So the situation at the moment is it's super, super hot market. So these graphs are from of Mariva. It's in the north side of Perth, very, very strong on data. Yeah. So the prices has grown from 350 to sitting somewhere around 480 now. But the good thing with Perth overall is even though prices are growing super fast because the rental crisis, rents are growing with the same pace. So what we have seen that even though both are increasing, so rental yields are not compromised. We are still securing a lot of properties giving 5.5% plus rental yield. I would say this is the only capital city in Australia which is offering 5.5% rental yields in general. Yeah. So again, as I told you, what two markets I feel are the best are the Brisbane and Perth to invest. Brisbane, not really a massive positive cash flow property or good cash flow property, but it's a good for a capital growth, right? I'll tell you some reasons behind that. Uh, this is just overall from a core logic how these five capital cities are performing. So see, it was in an active territory. Most of the cities was in an active territory. Perth was the only one wasn't affected much, but most of them was an active territory. It has shown like a positive now. All of these is a 3 months change in dwelling values, state capitals. So Sydney, Perth, Brisbane, Melbourne, Adelaide, all five capital cities are in a positive territory now. This is from a May 2023. Yeah. So that's recent performance. Why I feel is Perth and Brisbane can be the next market. Let's talk about Brisbane. I have done the video where I explained a lot of different things about the Perth, but I'm just showing some highlights here. So it has a highest GSP per capita comparing to other capital cities. Yeah. Only capital city, as I told you, providing 5.5% plus rental yield. Plus, there was a mining bust in 2014. At some point, Perth prices and Sydney prices had not much difference. It's almost there, right? Sydney market was there, Perth market has grown too much, it was just there close to Sydney. But from there, what happened is Sydney market grown. very high. And Perth, there was a mining bust in 2014, price gone down. So what was happening is there's a lot of catch up for a Perth to do, and you can still buy a very decent, nice houses in a 500k range. We have secured 9 properties in just May 2023. Yeah, there's a very high investor activities wherever we are buying, super hot within a day, multiple offers. The only reason why we able to secure some properties there is because we have a very good relationship with the local agents there. Yeah, high number of projected overseas arrivals. So Perth is because of interstate migration due to the visa purposes, and there's a lot of migration happening from overseas as well. Yeah, so a lot of people coming. The issue is it's a massive demand, but the supply is very low. There was an uncertainty in the construction industry. That's why the supply is not there, but demand is very high. That's why the rents are going through the roof. Yeah. Another reason is there are massive projects. So naval warship manufacturing is happening somewhere around the Rockingham Council. There's a new container port at Kavinana Council, right? It has a good lithium deposits, and it can be a next manufacturing battery manufacturing hub. So battery manufacturing companies are jumping there and putting their battery manufacturing units. Yeah. So metronet is an again metro project which is connecting all the far regions or uh, hubs to the main city. So trains are running very fast, 130 kilometer per hour, I think. Even though Mandura is like 70 kilometers, you can be in a city in less than an hour time. So Metronet is doing a great job connecting a lot of those suburbs to the metro, and to the CBD. Yeah, there is a lot of other activities happening in Perth. For that, watch my video which I've done November last year. Brisbane, as we know, as I discussed, it has corrected around 11%. Now, what we have observed is it is aligning for a growth again. So we have seen a lot of investor activities coming back. One thing we have analyzed and realized is basically people working in Sydney who can't afford house, their next preference is Brisbane. So there is an international migration, but there is some interstate migration happening, and people going towards Brisbane and Queensland as well. So what we have seen is you can secure some good properties in Brisbane Metro somewhere around 550 to 650 range, and it's offering 5% rental yield. Whereas what we see in a Perth, it's around 6%, 5.5 to 6% rental yield. What does that mean is Brisbane, in today's 6 to 7% interest rate scenarios, uh, will be an active geared properties, but it can grow pretty well in a capital growth. So, how you can significantly improve your rental yield is try to find a property which has a granny flat potential. You can put a granny flat, and then same property can give you around 7 8% rental yield. Another reason why we suggest Brisbane is, as we all know, Olympics 2032 will attract a lot of investors. A lot of investors will start looking into the Brisbane close to the Olympics. A lot of projects will start kicking. Already some projects are started, which is starting to keep 2032 Olympics in a mind. So when these projects are starting, infrastructure is coming, that will bring a lot of jobs and attract a lot of people in there. Another good thing is Perth somewhere still depending on mining, whereas Brisbane have a diverse economy, affordability. Yeah, it's a friendly weather, attracting interstate and international migration. Again, similar to Perth, there's a lot of great projects in Brisbane, such as Toowoomba to Brisbane Passenger Rail. So they are connecting these two major. Uh, One is Toowoomba Regional Hub and Brisbane CBD. The travel time will be reduced, I think, around 1.5 hour between these cities. So it's a Cross River Rail project, a massive project, right? So it's a major hospital expansion, happening throughout the city, such as Springfield. There's a massive expansion of hospital. There are a lot of renewable energy projects coming in the region as well. So Brisbane, it's looking lucrative. So uh, my personal preference is Perth and Brisbane, and this is just about the capital cities. Uh, but there are a lot of other regional hubs which are really good on data as well, such as Townsville, Cairns, Tomba gone a little bit high, but yes, somewhere there to Bundaberg. There are a lot of good regional hubs in Queensland. Whereas in Victoria, you can say Traralgon Belt, Morville, all those areas are pretty strong, right? So yeah, so there are opportunities everywhere. New South Wales, I would say Toowoomba, not Toowoomba, sorry, Tamworth is very strong. Yeah, Wagga Wagga, Tamworth, and all those areas. So yes, there are opportunities everywhere. But if you really want to invest in just a capital city, look into Perth and Brisbane. I highly recommend. Next is I'm going to share some success stories, right? So here, one of our clients invested a property, as I told you, New South Wales Regional, Tamworth. So we bought this property for 340K. Rent is 420. The client is just in Australia from last 1.5 year. This property valued now 390, and he extract 40K equity out of this house within maybe 3-4 months of after the purchase. We already bought it under the market value. Valuation has was pretty good. So he has extracted 40K. He added some 10 to 20,000 dollars from the pocket. Next, we bought him in this house completely off market in Perth, in a very premium suburb. So that property again we bought for 473, now rented for 550, giving 6% rental yield. I'm pretty sure if he go for a valuation again, he will get around 500, at least 510, 20 for this house. And we just bought 3 or 4 months ago. So yes, so now he's kind of ready to purchase third one in next few months. Next is if you really want to buy in Sydney, this is our Sydney purchase for our client. We bought a property in a Blacktown Council with granny flat already building. Yeah, so it has a main dwelling and then a granny flat. So main dwelling is roughly 600 per week rent and a granny flat is 400 per week rent. So we purchased this property for 1.04 mil and the rent is around $1,000 per week. The land size is massive as well, 555. So if you're living in Sydney, you can understand the land value there. So yes, so if you really want to secure property, just want to stick with the Sydney, try to find something like that which is still giving you 5% rental yield in there, whereas in general you'll get just 3%. You can implement the same strategy as I told you in a Brisbane to improve the cash flow. That can go to the 7%, 7-8% mark. Yeah, so there are a lot of other. This is all properties we secured. We are securing every second, third day. We are securing something. Yes, so example, this one bought for 517, rented for 650. This one bought for 543, rented for 670. This one bought for 516, rented for 570 per week. This one is 513, rented for 630 per week. This one is 535, rented for 670 per week. We are securing a lot of properties in a Perth market like that. So we now securing properties in Townsville, Cairns as well, the regional hubs. So we are kind of expanding nationwide, building up a team to achieve those great results. I would say if you really want to get some help or you want to get some professional to look into your situation and help you buy the property, feel free to reach out to me. So this is my phone number, my email address, and my website to have a look. Thanks for connecting. Stay tuned and see you in the next video. Bye.